Welcome to my daily reports market videos on Wednesday the 15th of May with me, Richard Perry, market analyst at Hantec Markets. We looked as though earlier on that we were finding a little bit of support. There was a basis that markets were beginning to settle down, following on from the escalation of this trade dispute that we had over the weekend. The US moved to hike tariffs on Friday, then China responded on Monday. Since then, we've just started to see a little bit more of a settled look. You can see that with the VIX volatility, for example, which is far more stable in its outlook there. Also, the dollar has interestingly rebounded in the last couple of days, but just started to sort of consolidate a little bit. You can see that through yields on treasuries, which have been consolidating last session or so, and it's interesting that this is helping to see forex majors relatively stable, and I say relatively stable because what we have seen is some significant moves, certainly in the last few days anyway. Whether this continues or not remains to be seen, because it's pretty much waiting for the next bit of news flow really around this trade dispute. Donald Trump came out on Tuesday, suggested that he was looking for a very successful deal still in the next few weeks. So it could be that we a little bit of limbo possibly in the coming weeks, but certainly at the moment it's interesting that we've seen this element of consolidation. Wild moves on equities mainly, certainly Wall Street very much up and down in recent sessions, and what we've seen is the S&P 500 just rebounding yesterday. Futures were higher early morning today. They've just come back a little bit, and that's helped to drag these European markets a little bit, despite the fact that Asian markets were higher. Not only that, we also saw, Asian markets impacted to an extent by the very disappointing Chinese data overnight. Industrial production, look at that massive miss on industrial production. Retail sales, massive miss, and also fixed asset investment as well. Suggests that the April numbers were possibly impacted by stimulus, in the fact that stimulus measures that had been put into place over in the first quarter of the year maybe stepped back a little bit as the trade talks were sort of showing signs of progress, not seemingly helping these economic data points here. But you could imagine that given the surprise of the move, of the disappointment, I can imagine that stimulus measures are likely to be stepped up in China on the back of that. Now, we've got Eurozone GDP, the second reading of Eurozone GDP today, expected to be reiterated at 0.4%. 1.2% on the year, and then US retail sales into the afternoon, expected to be plus 0.7% in April, from a pretty strong March reading, so likely to be a pretty decent number there. Also watch out for the New York Fed manufacturing, 8.5 is the expectation there, down from 10.1 previously. So that takes me to my chart of the day, sorry, that's gone completely wrong. It takes me to my chart of the day, which is the Euro Aussie. Now, Euro Aussie has been rising in this nice solid uptrend over the past few weeks, and it's broken out above 61.20 now, with a strong breakout on Monday. Now that came on, you could argue, reduced risk appetite, given the fact that the Aussie is considerably geared towards China. The Aussie under pressure, Euro fairly solid in recent times, and we saw a breakout on Euro Aussie, and that seems to be confirmed across the momentum indicators, technical indicators, all confirming this outlook. MACD lines, multi-month high, stochastics and RSI really strongly configured. Now this looks like a decent trending move, and not only that, we saw a pullback yesterday which came back to the breakout at 61.20, found support and then pulled higher again. So that is a really positive indication of the intent in this market, and I think a move out towards 63.55 area, which is this old September-October high, highs there, likely to be seen in due course, because that's the next real resistance really. And I think you're looking to buy into weakness. Aussie looks under pressure, and I think that's going to continue. You can see that on the hourly chart, positively configured across momentum indicators. MACD lines consistently again turning up around neutral. RSI holding around 40, pulling higher. Strength in to suggest that corrections are a chance to buy. You can also argue that this rising 55-hour moving average is a pretty decent basis of support, coming in at 61.50 at the moment. So any real weakness, I think, is going to be seen as a chance to buy on Euro Aussie now on the near term basis. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.